Hello, everyone, and welcome to Pixels and Profits. Today, we will discuss some of the biggest and most influential gaming companies in the world, Tencent and NetEase. So in recent history, Asia and China in particular have been dominating the global gaming market, especially for mobile, with Tencent in particular owning the top two mobile games in the world with Dungeon & Fighter Origin and Honor of Kings. Quick note also that the data service providers undercount revenue for those games because they do not account for revenue in alternative Chinese app stores. Further, we have seen the rise of Chinese gaming in emerging new giants, in addition to Tencent and NetEase like MiHoYo, Lilith, and potentially Game Science coming up with their game Black Myth Wukong. A recent InvestGame report also suggested that early stage venture game investments in Asia was greater than every other geo combined, many of those investments in China. Understanding China and the two biggest players in China, I believe, will be increasingly important to have full context on the global gaming market. Here to discuss this, we have the Pixel Brothers, Matthew Conterman and Brian Piganoff. Welcome back, Pixel Brothers. And before we kick it off, guys, anything you guys want to say before we dive in?
I thought you said Pickle Brothers at first, which is a new one. No. Happy summer.
That could be taken a lot of ways.
Yeah.
Let's not go there. Let's just move on.
I got to say, pickleball's starting to take off. So if you guys take up that hobby, you guys can be the Pixel and Pickle.
6 months, this will be a pickleball podcast.
I'm not 50 yet, but maybe next year.
All right, so maybe we dive right in. Matthew, you want to take us away? We'll start with Tencent, and maybe we just start with like the business overview.
Yeah, and it's fun to do this for me because for those that don't know my background, I spent 3 years in Hong Kong covering these companies, the Chinese gaming companies, Chinese internet, and more broadly Asia tech. So it's kind of back to where I was just a couple of years ago. And Tencent's a conglomerate, and the way to think about them is similar to any of the mega cap tech companies in the United States, like a Facebook or a Google, where they have lots of lines of businesses, but majority of their revenue and profit comes from a select few of them. And so, what the gaming industry, the people listening to this arguably care about is the gaming business, where, Tencent is the largest gaming company in the world by revenue. If you kind of break up what Tencent looks like and how important gaming is to Tencent. We talked about how for Microsoft, for example, Xbox is hugely important to the gaming industry, but it's still kind of ancillary to Microsoft. Gaming is actually still a core part and a large part of Tencent's business. About half of their revenue comes from what they call the value-added services segment. Majority of that, more than half of that business, that value add, comes from games. There's a little bit of cross counting. They have their social networks business, WeChat and whatnot in there, and some of their gaming revenue actually flows through their social networking business. So when you add it all up, it's probably somewhere 60% to 2/3 of the VAS business is actually games revenue. And if you break that down into two pieces, about 43% of VAS revenue or 21% of consolidated revenue is from domestic games. And then 18% of VAS revenue or 9% of consolidated revenue is from international games. So, other businesses that they operate in, online advertising, they have a fintech business and business services, which is their cloud and now their AI business. If you just kind of look at the P&L for a second and the fundamentals, their margins improved in 2023, mostly as they, like most companies, went on the efficiency kick, cut down a lot of underperforming businesses, did some cost cuts and shifted investments into a few key areas such as AI. They also cut G&A expenses by 13%. That's excluding R&D, so just their G&A. Their margin went up from 30 to 31.5% in 2023 from 25.8%. That's an operating margin because of the combination of growth in the core businesses and the cuts. And just from a cash perspective, because cash rules everything around me, just like Wu-Tang used to say. They generated about $23 billion of free cash flow in 2023. That was up 89%, even with increasing CapEx 33% for all the AI stuff that they're doing.
And Matthew, when you compare, you mentioned Tencent is the biggest games company by revenue. So who else, like globally, would potentially compare, and how do they compare against Tencent?
I mean, Tencent's kind of on another level. Like, it's technically Apple is there and Google are there, right? Because of if you count the commissions they generate from App Store fees, which look, if we count that for the consoles, we have to count it for them as well, right? And then you get into the console platforms, you get into the Microsofts and the Sonys of the world. And then you get into the large AAA publishers and the large mobile publishers, the likes of EA and Take Two are definitely on that list. And then there is a long tail. It's an industry that, despite consolidation that we've seen, remains extremely fragmented, right? The gaming industry is plus or minus 200 billion of revenue a year. Even the largest players are barely 5-10% of that each, right? And so it still is, if you're a HHI index stan, I'd probably just put everyone to sleep with 6 letters. But if you are, it's a fairly fragmented industry relative to lots that are out there. Now, if we're talking antitrust, don't quote me, because the whole argument of antitrust litigation, and this is where things get different, is what do you define as relevant markets? Is console a separate market from mobile, or are they all the same? Because a lot of Tencent's revenue is mobile games. And so if you shrunk that market and said only mobile, then obviously that market share looks a little different. And so does EA's and so does Microsoft's.
If you look at the just from like brass tacks last quarter, they did about 6.6 billion USD, 70% of that being domestic, which is roughly similar to what Take Two does in a year, like 5.5 billion upcoming. And then EA did 7.1 billion TTM, so trailing 12 months, full fiscal year. So it's about 4 times the size of those companies.
Wow.
So, yeah.
So on a scale basis, they're clearly, as you're saying, Matthew, on another level, tons of revenue. But what about in terms of operational efficiency? When you look at their margins compared to the margins of an EA or of other similar Western company, how do they compare from an operational or margins perspective?
We're guesstimating here because they don't break out the margin profile of pure games from the VAS. They just report the gross margin for VAS overall. But obviously, the social networking business is a significantly lower margin business because all of the ad revenue is booked separately, and so it's not going to be a like for like. But look, if you just look at the scale of the studios and of the titles they have, that goes back to our prior conversations about you get economies of scale in this business from studios and from titles. Their margins have to be probably the best in the industry, especially if you look at the key studios, which I know we'll get into, the Timmys, the Lightspeeds, Riot in the portfolio, things like that, Epic, right? We know these are extremely profitable businesses, especially when you focus on the core operating aspects of those businesses.
Got it. And yeah, maybe we could just transition over to studios now. And as a fellow game developer, one of the things that really becomes evident when you look at some of the studios owned by Timmy is that these guys are world class. Like Timmy, in terms of technical competence and capability and depth, is arguably the best studio in the world. And so Timmy's certainly known for games like Honor of Kings, Call of Duty Mobile, Pokemon Unite. There's also Lightspeed and Quantum Studio, known for PUBG Mobile. Maybe Aurora Studios, now known for Dungeon Fighter Origin, which is the #1 game in the world. And there's a bunch of other studios I won't go into, but clearly one of the things that is pretty obvious is that these studios, and especially Timmy, are just killing it. Yeah, and another title that Timmy makes is QQ Speed. Not a whole lot of people are aware of that game, but that's also a game that is very, very successful. And so what we have is a situation where Tencent has world-class studios. They kind of dominate specific genres, like the shooter genre Tencent is dominant in. And they also have, and I've spoken to some Timmy, former Timmy engineers, and like the technical capabilities that they have and the specific approaches that they take are really advanced. And so I would say that from an internal studios perspective, this is a extremely strong area of competence and capability for Tencent. And maybe the other area that we could talk about is in terms of the holdings. So not everybody is aware, but Tencent basically fully owns minority stakes in almost every major gaming company globally. And so the word on the street, at least back in the day, is that they had this approach of trying to look at every major game platform and then the major genres by platform. And they just had this list. Okay, here are the top companies in every genre. And then they would go and try to own or take ownership stakes in each of those companies across the board.
You can speak to this strategy. You were on the other side of it for a little bit.
Yeah, Brian. You were at Glue when Tencent took an ownership stake in Glue. Any comments on that relationship? Or
So they had taken an ownership.
You can talk about
They
it.
had ownership in Glue before I arrived, but we did work pretty closely with them. They had a couple of guys on the board who were very respectable and good people that have since moved on to other things. Look, I mean, they, aside from just like studio excellence and things like that, they were very proficient in the art of user acquisition, well ahead of everybody else. And I think that Glue took some good learnings from that. Outside of that, it's like they own so many things that they didn't take a very heavy hand in terms of how things should be run and like not overhand like that at all. But it was just like good for guidance, good for expertise in different areas and things like that. But that's pretty much all I'm comfortable saying on that. But overall, good experience with the folks that I did know from Tencent.
Yeah, and I think though the one I believe the one difference in their approach with Glue is that if I remember correctly, they took a different approach with their relationship with Glue, in that they did try to be a little bit more hands-on. If I remember correctly, like there was some kind of shooter game that they were trying to partner with Glue on and actually try to work more closely together, versus other investments. From what I've heard anecdotally, is that in other investments, Tencent is generally just completely hands-off.
Yeah, that's true too, right? I think there was a time when that was part of the story. That was also right around the time that I arrived. But we're talking about 2018 here, and there was, I would say, hundreds of millions of dollars were invested by U.S. mobile gaming companies trying to get shooters to work, to the point where everyone was just like, you know what, this is just never going to work, and like we're never going to figure out this audience in the Western universe. And then, fast forward to Call of Duty, which really set the stage. Well, you can even say Fortnite, right? Like Fortnite back 2017, 2018 was kind of like a inkling of what could be successful on mobile for a really true rapid actor. And then Call of Duty really pushed that boundaries too. But for anything that was lower boundary or like without that existing IP and cross-platform play, it was just like such a disaster in the making. It's just, oodles of money thrown at this and no users and questionable monetization, you name it. But yes, that was certainly a thing.
And prior to 2018, another aspect of those investments was also localization and then publishing in China. So, look at, the list goes on and on, but, take Ubisoft, for example, who, Tencent is the second largest shareholder after the Guillemot family. Part of the investment thesis is, hey, we're going to invest in this. We're going to bring your titles to China. So they've, brought Valorant. They're trying to bring Valorant. They've brought Rainbow Six. They're making mobile versions of those games. So, that's a part of the thesis for some of these larger investments. Also, there's, I know you kind of have a list here. It's broken down. It's just household names. No big deal. The Riot Games, Supercell of the world, Anyclip, no big deal. Just giant companies in the world of gaming. And even in, if you look at, I like how you broke it down. There's, significant minority stakes as opposed to the smaller investments. And I think the main difference here is strategically exactly what you guys were discussing. There's stakes where they just kind of come in and are hands off, and then there's stakes where they come in and strategically are finding ways to either invest in that business or localize that business. In terms of, for example, Epic, it's Unreal Engine domestically. It's, looking at, they were looking at ways to bring Fortnite to China. It didn't work out. Ubisoft I mentioned, right? Roblox, they were trying to, build a Roblox platform in China. They had issues with, regulations. They took it down. But, whereas some of these other investments are purely more financial focused and less strategic.
Well, it also works both ways too, right? Like they can help with efficiency or managerial things that might come up, but at the same time, they're also gathering a lot of information from these companies that represent a dominant share of gaming revenue, whether it be mobile or console or whatever. So it's like a repository for all things that are gaming, and they have so much reach and breadth that it's really untested in gaming. We haven't seen anything like it.
Yeah, we'll talk a little bit about some of their investments in a second, but to your point, Brian, I 100% agree with you. Like from former Tencent folks who I've spoken to, one of the things that they mention is that part of their investment strategy is actually the collection of information. And they claim that given the breadth of all of the investments that they have, they say there's no other company in the world with as much information about the current pulse and state of the games industry than Tencent. Like nobody comes close to them in terms of an information advantage because of all of those investments and all of the sort of confidential information that they obtain.
Agreed.
So it's good to know any Tencent executives if you're in the gaming industry out there. One other thing I wanted to touch upon before we talk about investments is like you mentioned that one of the areas that Tencent helped Blue with is on the user acquisition strategy. And I remember hearing from the CEO at the time, I forget if it was Niccolo or whoever it was, but like they had mentioned a specific strategy around, I forgot what he called it, like critical mass or getting into orbit or something
launch
like
velocity.
That, which is launch velocity. Yes, launch velocity, which is this idea that for any new game launch, you want to have like a minimum amount of spend to really push the game. And I remember that was one of the areas where Tencent in particular has unique and very valuable information in terms of launching UA at scale. And one of the things that they notice, and one of the things that they've spoken to me about in the past, is that there are actually nonlinear kind of effects after a certain amount of scale that happen for a lot of mobile game launches in particular. And certainly, I think that with WeChat and with what they've done, one of the things that they really do push is like one for big IP and huge UA pushes, because there does seem to be some kind of an effect at a certain critical mass of users that you get lower CPIs, higher kind of organic inflows and things of that nature. And so certainly one of the areas where I think that Tencent in particular has great expertise is launching at scale from a user acquisition perspective.
Yeah, I mean, if you want to express that mathematically, it's all about like K factor and organic flow, right? Because not every person is going to arrive at a new game via Instagram or Twitter or wherever else they find games. It's going to be through word of mouth, virality, what are your friends playing, and things like that. So if you make a big presence and a big push in the charts, it's naturally going to be better for your game. That being said, it still needs to have the important shit behind the curtain, like, retention and monetization. Otherwise, you're just kind of pissing away money. But that was core to Glue's success, is being able to launch games with a significant amount of UA behind it.
I would also note, to your point, and I'm by no means a UA expert, so but in terms of the virality side of it, right? If you look at all the investments they've done, IP plays a huge role. We've talked a lot about IP with Embracer and others, but the way that Tencent has done it, right? Call of Duty is a great example. When they invested in Activision, the thesis might have been different at the time because it was many years before mobile even took off. But having that relationship and being able to tap in and create Call of Duty Mobile and kind of be the first global mobile shooter with a known IP, with an established IP, and then layering in their expertise in UA on top of that, it was really a no-brainer at the time, and no one's been able to replicate the success save for PUBG Mobile, which they also did, right? But there really hasn't been any replicable successes on mobile. You could throw Free Fire in there, right, which is kind of the one-off, but there's been a lot more failures and successes in that space.
Yeah, and maybe something we could touch upon is like this model that they have, right? So the Tencent model, especially with Timmy, is really to try and take very core IP. They use their world-class development team to build a great game behind that IP, and then they push the shit out of it because, as we discussed, they're so great at user acquisition at scale. So one one thing though that I have anecdotally noticed over the last few years is that a lot of the relationships for this typically called a co-development model, although Tencent does like a lot of most of the work,
Yep.
right? And then they partner with, and the IP partner has like some oversight and things of that nature, and feedbacks in. But like what I've been hearing is that almost every China Western relationship with that model over the past few years have been extremely strained, and we're talking across the board. Whether it's on that with Activision, whether it's with like every Chinese company. I'm not um, singling out Tencent, but that kind of model you'd have to think about whether that continues in the future or whether Tencent gets to a point where they're like, okay, working with the West, we're doing all the work. A lot of the complaints I hear from the Chinese side is like, F these lazy Western guys. We're doing all the work. Why do we get so little money for it, right? Because the co-dev deals are quite, I would say, given that Tencent does most of the development, I would say are fairly lucrative for the IP holders. But that I guess that's something we'll see play out in the future.
That's kind of like a test of time, right? Like it's questioning how important IP is, and we've proved that it's very important, right? You could have a great polished shooter from Timmy 3 years ago that was just called like random, shooter bros, and it wouldn't have done anything. But it had the Call of Duty brand behind it, and it had like everything just kind of worked. But it is kind of doing a deal with the devil, right? You do lose some economics, you do lose some control, and those relationships can get strained. But if you look at like Ubisoft, right, they're trusting Assassin's Creed with a Tencent studio. It's probably the best decision they've ever made, but they're going to have to grapple with the same issues, the same. Otherwise, they're going to do like some more shit, like do their own mobile, like what was that Division? Like, right, it's canceled indefinitely. Obviously, they don't have the proficiency.
It will be interesting to see over time, especially as we come out of that era where everyone was investing heavily in mobile. A lot of these partnerships were struck when everyone needed a mobile strategy for their investors. Now we're at a point where mobile's been, from an investment perspective, dead as an investment theme, right? People are less enthused about it, and there's been pullbacks and rationalization of portfolios. It'll be interesting to see if that shifts from that co-development partnership model to more of a traditional licensing model.
Yeah. One specific example I think that was interesting in recent history is Apex Legends Mobile.
Mm-hmm.
Okay, because word on the street is that game was actually profitable, but that it was on the China side that they were actually already working on a competing game because they were so fed up working with the West.
I'm shocked.
And then they just canceled that project and then launched essentially the same game with their own original IP. So I do think at times, I mean, this is going too much into the weeds about why this conflict exists between China and the West. I actually know a lot of the people directly on both sides. So I've heard both sides and I kind of believe I know what the issues are, but I do think this is going to be a continuing problem for these types of co-dev relationships in the future.
I think what you need to design into those sort of contracts is if you have something like Apex or COD that has a really good license or a really good IP, that you would prevent that competition contractually for a period of 3 to 5 years or whatever. So it does call into question like how important that IP is, but you have to have some heft behind it.
Well, but then also, like operating in China is difficult, right? And maybe I'll talk about this later. But Tencent is also a bit of a bully. They're known to be a bully. So like, you could have a contract with them, but then they might just come up to you, Brian, and say, "Okay, we've got this contract. I don't care.
Yeah,
come sue us. Come to China and sue us."
Well, just to speak about what you're talking about, holistically at a high level, we're used to the bullies being Apple and Google, right? Because in the West, those are the platforms you publish mobile games on. In China, there's no Android. There's no Google Play Store. There's Android, but there's no Google Play Store. Every major platform has their store, and turns out because Tencent has WeChat, which is, the second largest social networking platform after Instagram. They have power, and if you think 30% commissions are aggressive in the West and they should go down, some of the stores in China on Android are more than 50% commission rates. And that's where Tencent especially is known to be a bully in terms of, extracting really strong rates to distribute apps on WeChat, especially.
Yeah, I've got a lot of stories I don't think I should talk about
No,
them
we don't
publicly,
have to
but
go into individual stories. I just thought I'd give like the 360, the
yeah, but
10,000
they
foot
are
view on kind of the
bullies.
situation in
Let's
China, because it is a different landscape to the West than many of
yeah.
our listeners are probably used to, unless you've published games in China before.
Yeah, we should call it like it is, and it's very difficult to go against Tencent. I'll just put it that way. But okay, so like shifting to holdings, I think you mentioned some of the holdings. They obviously own stakes in some of the biggest and most well-known companies in the world. 100% ownership of Riot, 84.3% ownership of Supercell, Miniclip majority ownership, Funcom, Lei Yao, the Lei Yu, I don't know. But they are the parent company of Warframe developer
Yeah,
Digital Extreme.
I know the former CEO Alex. He's a good guy.
Okay.
He's got a new generative content company in China.
Okay, Sumo Group, and then they also own significant minority stakes in 40% of Epic Games, Ubisoft, Krafton, starting with a minority stake in Bluehole, Frontier, Platinum, Jaeger, Clay, Paradox, Roblox, Shark Mob, Don't Nod. Own a bunch of smaller investments in Voodoo, Platonic, Payload, Bohemia, Fat Shark, Grinding, Gear Games, Sumo Digital, Turtle Rock, Sega, Embracer, a bunch of different companies. Okay, so like they're all over the place.
No, but it goes back to
And,
your what I think, I can't remember which way you said it, but their thesis has always been they want to have some skin in the game everywhere, and you know I don't think they've made, aside from the platform Roblox, I don't believe they've made large investments in Roblox developers yet, but I'm sure that that's on their watch list. I'm sure UEFN developers are on their watch list now, because it may be premature, but that's when you start when you put your VC hat on, right? Because it's effectively what we're talking about at this point. They want to have skin in the game to understand these businesses. So when it's the right time for them to either scale those investments or scale their internal investments, that's why they do it this way.
okay. And maybe we could now talk about, okay, so Tencent, domestic powerhouse, they own stakes in a bunch of companies everywhere. So then what are their key growth opportunities given, and we'll talk about political environment and stuff like that at some point later, but like you guys want to weigh in on where you see growth for them?
Yeah, I mean, maybe we separate the games business from the non-games business, because I think, they're very distinctly different. Look, I think there was a period of time where the Chinese gaming market was rough, even before the Western gaming market was. There was lots of new restrictions that came online post-COVID. I think with DNF Mobile, Tencent has proven that they can still effectively launch and scale mobile games domestically. I ran the numbers earlier this week. This is just iOS, but they've already brought in 375 million of net revenue since May. Like, if you guesstimate conservatively an Android number, you're well over $500 million and probably closer to $1 billion net revenue at this point for DNF Mobile, like in 3 months. I think everyone in their right mind would raise their hand and take that in a heartbeat. So, for a while there was questions if the market was dead to new releases and they couldn't do it anymore. It's clear that they can now. The sustainability for more than 3 months and the cannibalism of what that does to the rest of the portfolio is still kind of a question mark, and we have to see. But look, this is one of the biggest gaming franchises in the world on PC, long before a mobile game. It's one of the biggest PC game, actually the biggest PC game in China. It was really a no-brainer in terms of how successful it would be. Just took them 6 years longer than they wanted to get it out the door. But so we'll see what happens with the rest of the portfolio. Honor of Kings, they have an RPG in that, they have a fighting game, they have an RPG game, both coming from the Honor of Kings IP. So, we'll see what those do. They also have a Rainbow Six Siege game coming out, mobile game coming out domestically as well. So, we'll see how those do, if they can continue to keep the streak up, or if DNF Mobile is kind of the no-brainer, but also the exception to the rule.
Right. Yeah. I mean, I think like the key growth opportunities I see for them is just, based upon their workforce, the extreme technical advantage that they have. I think I mentioned before, I've had an opportunity to speak with folks that formerly worked at Timmy. These guys are incredible. So I think that's really where, if they can surmount some of the challenges, I think, and there are some major challenges which we'll go into, but I think that's really the main issue that's preventing them from having higher growth and being accepted more globally would be in the challenges. But they certainly should be able to address a lot of different product areas, to be able to address them at scale, and to create products that aren't just for the domestic market. But maybe we should talk about the challenges.
Yeah, I would just briefly say, one thing they did invest in 2021, 22, they bought Sumo, for example. A lot of that was, and I think there was a lot of people that had the cross-platform bug for a couple of years, right? And they wanted to build console and PC games for the international market. We haven't heard a lot about that recently. That might have been, fruitless in the end. And, taking Riot and those studios out of it and focusing on the Chinese studios investing, Lightspeed had built up a huge LA office, right? Quantum has built up a huge, I think they're in San Fran, right? So, can those studios produce PC console games for the Western market from Western, actually geographically Western locations? Or is that fruitless money? I think there's still a question mark there. And then just the last opportunity is all the non-gaming stuff, which is mostly AI related.
We also spent a lot of time already talking about investments they made in the past, and it's worth noting how important those have been to their historical growth and scale. And we may be nearing a stage where we start to see some of those investments, exiting, right? Like we've already known that Epic is potentially going to IPO for the last 2 years, and maybe it takes another 2 years. But they own 40% there. That's potentially a 35-ish billion company at IPO. So that's a good inflow of capital.
They got out of C Limited, which was Free Fire, Garena, right? They got it. They're completely out of that now. So yeah, they're definitely looking at harvesting some of these investments. I mean, C was easier because it was already listed. It's going to be more difficult for the unlisted studios, the unlisted Western subsidiaries. Epic, as you said, if they IPO, that opens up the window. But like Riot, Supercell, etc., it's like, it's hard. It's hard to find a buyer for something that large unless it's a public listing.
Right. But with that inflow of capital, do they continue to be investors in Western-focused studios where a disproportionate amount of the spend is, or do they kind of retrace and deploy that capital elsewhere in the industry or in their own industries, right?
Or I was going to say even beyond gaming. I think they've done more investing in enterprise software and SaaS and cloud. Recently.
So that's really the big question mark here is like, where is the growth coming from? Are they going to curtail efforts away from gaming into AI and B2B software and other things for the Chinese market versus just continuing the path they've been on for so long?
Yeah.
And Matthew, just a quick point to the topic that you were discussing around Sumo and cross-platform. I will say that about 4 or 5 years ago, speaking to different Chinese executives, there was a specific thesis that a bunch of the Chinese gaming companies were thinking about, which was basically, how do we create Nintendo games off Nintendo with a free-to-play model? So free-to-play Nintendo games off of Nintendo.
And then MiHoYo did
it. Yeah, but I think a lot of the companies were thinking in that way. Like, how do we do that? All right, should we shift to challenges?
Sure.
Yeah, I can take it. Yeah, I mean, we all know about the macro gaming market malaise. That's nothing new. That's still a challenge, right? Supercell. I think if we look at the mobile side, for example, Supercell successfully reinvigorated Brawl Stars. Where they doubled the revenue when they did those changes last year. But that's a story for Ken Lendon to tell way better than any of us can, because he's done the deep dive on it, right? But shout out to Ken. But they also failed, relatively failed in a new game launch, and so who knows, what that market looks like going forwards for them. The international PC console business, we're looking at Riot. The fighting game still seems like it's in dev hell. what, 5 years now, right? So some of the things that were promised and are in works continue to not show up. Epic is fighting a political battle with every other technology company, right? And clearly struggling to, generate the next leg of its growth with UEFN, still being very, very early and being very, very dilutive to their margins. And so, when you kind of look at these key assets as a proxy for their international exposure and the challenges they face, I think you can point to some green shoots, but you can also point to a lot of headwinds still. And it's really uncertain.
Yeah, I think from my perspective, the biggest challenge I see for Tencent is first and foremost the local market. So, as many people already know, China is highly regulated. There's been a huge push for restrictions on gameplay, especially for minors. Gaming is not viewed as a good use of time by the government. And so there's likely going to be continued limitations and regulatory restrictions. And further, when we look at the domestic market, I think, Brian, did you say 70% of their revenue is domestic, something like that?
Yeah, it's about that.
Yeah, and then we also now are seeing massive competition with emerging giants. We're going to talk about NetEase, but also we've got some of these big dogs like MiHoYo, Lilith, emerging guys like Game Science. We've got whatever Elex calls itself, where it's little offshoot companies from Elex. And the domestic market is also just really saturated, right? Because Chinese love games, they love spending money in games, but everyone knows that, and so many, many new games are launched.
I mean, that's a big part of the story that a lot of people don't talk about is in the West, home internet was standard by the early 2000s. Dial-up, fixed line internet was not standard in many Chinese households. For many Chinese citizens, the introduction of the smartphone in 2013-ish was the first time they accessed the internet. And so everyone looks at the hockey stick growth that occurred in the gaming industry with mobile. But you also have, and India is the same way, but it didn't have the same spending power as China. But a lot of what drove the growth in the gaming industry as a whole, specifically from mobile, was going from plus or minus 300 million gamers globally console PC to 3 billion when you added mobile. All these first-time gamers that came on board with mobile because it was their first internet access device. It was their first primary internet access device. And so, now smartphones in China are more than 100% saturated. Everyone has it. Spending power has been crimped because of the economic situation there. You mentioned the restrictions. Politically, the universities, the academic institutions are very powerful. And so it was no surprise in 2021 when all the restrictions came on, both online tutoring courses and gaming. These are all of the things that are taking people away from spending time studying and studying with the universities. And so very politically influential and very much impacted, the course of those regulations that came about. And so, it's a lingering challenge. It hasn't gotten, regulation-wise, hasn't gotten net worse in over a year now. And so I think we are starting to lap some of those comps. But yeah, I mean, kids under the age of 18 can only spend 4 hours a day, I think, 4 hours a week, playing games.
Crazy.
I definitely do more like 4 hours a day, probably, including like mobile games and stuff like Wordle and stuff like that.
Yeah, the other interesting aspect of the local Chinese market, when you look at the charts, is that it's much easier to chart in the top 10 in China. You see a lot more volatility in those charts relative to other geos. And so there's, I would say, less incumbent power to dominate the downloads in China relative to other countries.
I think you do see it in some other Asian countries, though, like Korea and Japan, where the new shiny toy does have like a huge spike.
I think it's because of Android. I think the higher Android penetration and the way that like game some of the downloads on Android is responsible for that. But anyway, it happens. It's certainly something that's happening.
It's also very much away from casual too, right? Because there's only so much graphical and gameplay improvement you can make on a match 3, but for shooters and things like that, it's always the fresh stuff.
And probably the other challenge I think we got to talk about is, and just to be real, no knock on Tencent. If you're from Tencent, please don't hate me. But let's just be real. No one trusts Tencent, right? So and especially outside of China, there's a lot of hesitation around using potentially Tencent services. There's a fear of the risk of your data integrity. And so I do think that, a challenge for them to grow globally is, even if they were to offer, whether it's cloud services or other kinds of services, there's going to be like this implicit way off of data sharing risk. And so they're going to have to offer reduced prices in order for other people to trust them, or they're going to have to change their reputation and image, which, is not great. They're known just, within the gaming industry as basically gangsters that threaten, bully, coerce competitors and startups in aggressive ways. It's like, hey, accept this offer or we're going to crush you type of business tactics, with many, many stories from many, many game developers. So I think that form of business practice will not work as well for them outside of China. And so, for them to be able to navigate, their reputation, and navigate how they operate globally, I think is going to be very challenging for them if they want to actually grow any kind of service, whether it's gaming or the other things that they're doing outside. And finally, I think maybe we talk about the political aspects now or later, but certainly we got to talk about geopolitical tensions between China and the U.S. As somebody that owns, or that operates in India quite a bit, there are certainly restrictions in India against Chinese applications. I assume that there may be a high potential for additional conflicts depending on the political environment. Trump has basically suggested that, at least in the US, if he wins, he's going to be pushing more towards a reciprocal type of policy stance towards China. Now, whether that, if it gets to gaming or not, we'll see. But I don't think it would be far-fetched to think that in the future, we could potentially wind up in a state similar to India, or potentially worse, depending on, again, the geopolitical situation. If China invades Taiwan, what happens? All that kind of stuff. So there's a
We've
lot
already
of
been there for over a decade now. I mean, the Obama administration kicked Huawei out of the United States, out of our cell phone networks, right?
Mhm.
The Trump administration did the tariffs on China. The Biden administration completely choked off semiconductor supply to China, right? So, and semi manufacturing, not just American made stuff, but anything using American IP, mainly all of TSMC's factories, right? And so, look, I mean, the only bipartisan issue in Washington is F China. And that's not going to change because it's not. They haven't competed on a level playing field for decades, and we're finally waking up to that. And security risk or not, whether it's perceived or real, the lack of fair competition with China for decades is being rectified. And manufacturing in the United States is booming, both because of the Trump tariffs and the Biden administration Inflation Reduction Act and the investments in manufacturing there. So regardless of the party, that's who wins, which party gets control, majority, minority control, whatever. It's not going to get any better. It's only going to keep getting more distant. To your point of completely banning, cloud services that are based in China, we're kind of already there, and most enterprises don't even do that anyways. I mean, name me a Fortune 500 company that's running on, Ali Cloud, right? They're all running on Azure and GCP and AWS, right? And so, it's, look, I mean, we are increasingly moving towards a fragmented, digital and physical world, and we're already there in many circumstances.
Yeah.
Retaliatory is an interesting stance, and we're getting into deep politics here, but China has, with the whole concept of dual circulation that came about under President Xi, has focused internally more than externally, and so a lot of the policies that they've done have focused internally. And it's interesting to see what happens as next steps, both with American politics, European politics. I think for our friends and listeners in Europe, I do think that's more of where the flux could be in terms of, they've leaned more towards the American standpoint in the last 5 years, right? In terms of siphoning off more of their connection to China. Could the political changes in Europe push them back towards China's orbit? That's a question mark, right? Germany's been struggling because they've reduced their manufacturing exports to China, and so these are all things that kind of are in flux and are interesting here.
I guess the one thing specific to the video game industry that we discussed before taping is just around the notion that China has unabated access to U.S. markets with video games, and the inverse is not true. If that were to be rectified, immediate buy signal for any U.S. publisher, because that playing field would be level for the first time. For those that don't know, if you want to publish a U.S. game, a U.S. made game in China, there's a various amount of approvals you need to go through, and you also need to have a local partner to publish that game, which automatically loses you economics and a variety of other things. And also, you're at the whims of other people to make the decision if your game is appropriate, etc. Here, you could have any sort of popular U.S. game emulated by China or just uniformly ripped off, and you have access to 100 million plus mobile gamers directly to the app stores, or increasingly so through PC and console distribution ability. And that's just like that's a very tough one to stomach, given this doesn't exist in other industries, and it's just kind of a question mark of why it's allowed in gaming.
And I think what you're describing, if we got to a point where we said you can't play Chinese developed apps in the United States, it probably extends to the investee studios. I mean, it depends on how the laws are explicitly written, but that probably accelerates the timeline for divestitures of the Riots and Supercells of the world. And
imagine if you couldn't play Riot or Supercell games in the
Ryan, I know you put the note in here, and it's important to note, but Supercell just brought Gare Griffin on as CFO, and I knew Gare back when he was at Zynga when he first came in with that whole new management team, and you don't bring in someone like that just to manage a P&L of a private company,
no,
right? Even a large private company like Supercell, they've got something cooking, and and whether that's an IPO, whether that's a sale to a different strategic buyer or whatever it is, someone like that doesn't come in just to close the books every quarter.
Nope. Right. Yeah, and I'm sure Supercell needs to thank their Franks for helping improve
Shout out to Franks.
The financial performance of Brawl Stars, which is making a huge impact for Supercell. But anyway, since we are pixels and profits, should we now talk about valuation? Do you guys want to weigh in on what do you think?
Yeah.
Is this an investable company? What's your outlook for their kind of market performance?
I think before we jump into Tencent specifically, and I'll share my screen, we'll make this happen for everyone.
Nerd alert.
We're going to have the context of Chinese markets, and you can see since basically COVID. Sorry, this is only going back to 2022, but over the last couple of years, Chinese stocks have just been out of favor, whether it's the blue line, which is A shares. So those are the domestically listed shares. The orange line, which is the FXI ETF, which is a basket of the international Chinese stocks, the ADRs traded in Hong Kong and the US and wherever, or it's a smaller basket of the state-owned enterprises, the SOEs. None of them have done very well recently. And so that's a big consideration when you're thinking about, the context for the discussion around any of these stocks, right? We're used to seeing Nvidia go up and to the right and or other gaming stocks in the US that up until recently did well, and having that as context. And so the context for this discussion is very different. China has been out of favor. Western investors have pulled a lot of money out of Chinese stocks and pretty much have little to zero institutional exposure to China at this point. But Tencent, look, on paper, it's cheap at 11.5 times this year's EBITDA, 10.5 times next year. Just on paper, those are small numbers. For our friend Corey, I have to throw this in. The PE ratio at 15.5 times and 14 times next year. Shout out Corey, but there's your PE ratio for you. But the stock, Tencent stock has been basically dead money for 3 years now. It's recovered a bit, but it's kind of dead money. But I mentioned the PE ratio. If you look at that FXI ETF as a proxy kind of for Chinese equities, it's only at 11.1 times PE. So part of the cheapness that we're describing is a function of the overall cheapness of Chinese stocks. And you can't necessarily say that Tencent is cheap relative to Facebook. You have to compare it to the rest of its peer group, the Babas, the NetEase, the Baidus of the world. Baba, for reference, is only trading at 6 times EBITDA and 9.4 times PE. So, relative there, Tencent's expensive, right? And so, look, I think, and I don't think this is rocket science, and I don't think it's like new. It's just it's hard to have a strong view on the stock without a strong view on flows into China, and I don't think we're going to see any material amounts of flows into China. It might be cyclical and it might swing, but structural flows into China have basically been dead for a couple of years now, and like I don't think that's going to change. Look, the fundamental story is a lot better. They've cleaned up the P&L. They've right-sized and focused on key business areas. But with all of these headwinds and challenges that we discussed, both at the micro business level and the macro geopolitical level, investors just have better opportunities elsewhere. That's just the short of it.
I think I'm also of the belief that the video game business is in process of troughing. We are recognizing again over sometimes folks forget this is a cyclical business, and we're certainly in one of those phases right now, right? Like continued job cuts, rationalization at large publishers and companies like that. But if you draw the line out another year, there's a lot of significant catalysts specific to the U.S. market and the U.S. publisher ecosystem that could spell a much better backdrop for gaming in general, right? Global gaming. The issue is a lot of the U.S. publishers are more expensive relative on multiples versus their Chinese peers. But that's because, investors can kind of look past the end of that trough into next year and have some expectation that these companies are going to outperform. But it's also they don't have to worry about 9 out of the 10 challenges we just talked about with geopolitical risk or with regulators spinning up and saying you can't launch this certain game here or other issues like that. So it's going to be a tough drag. I think you have to have a constructive view on the Chinese market for sure from a gaming perspective. You have to have a slightly positive view on geopolitical tensions easing, and that's probably going to fit into your election basket somewhere along the line. I don't have a view either way there, but it's certainly to change at the end of the year in some way or another. And, most of the time it's for the negative. It's gotten more negative, over time since, the Obama administration. So yeah, cheap, but cheap for a reason, right? And those are sometimes just value traps.
All right. Well, we spent a lot more time on Tencent than I thought we were going to spend.
But I do think as we transition to NetEase, the macro commentary is out of the way, and just copy paste all of that in for NetEase because it's all similarly applicable. But B, it is a cleaner story. It's much more of a pure play, and I can get into the fundamentals. Much more
playing a NetEase game, so it'd be more fun to talk about since.
Much more of the business is derived from games. About 80% of their revenue and almost 90% of their gross profit comes from games. If you split the games business up, 80% is mobile and 20% is PC console. So, they don't. I didn't go through the Ks and whatnot, or the 20F, I guess, as an ADR for the international domestic split. They used to give it out, and I think they stopped doing it when they lost the Blizzard license. Now they have the Blizzard license back, so maybe they'll go back to that. But that's a conversation for a bit later. I think if you look at NetEase, their strength has been multi-year franchises and just significant success with live services. Fantasy Westward franchise, multi-billion-dollar mobile game franchise in China. Not many people outside of China know about it, but if you look at the Chinese charts and you hit your translate on your search thing because it's all in Chinese, Fantasy Westward Journey, Fantasy Westward Journey 2, both of them probably still today are right around the top 10 grossing still. And so it does speak to their ability to have these long-lasting franchises that are just immensely profitable. But they also have new hit games too that have really done well. Eggy Party is a UGC game that's taken off in China and done really well. It's the first smash hit UGC game. Identity V has been around for a few years now, and they've got a pipeline that's really promising. They launched a kind of hand combat battle royale game a few years ago on PC called Naraka Blade Point. They brought that to console recently. They now have a mobile version coming out of that coming out. So that's quite interesting to see what that does on mobile. They have a survival game, a looter shooter. They're hitting all the buzzword genres. But overall, it's their games revenue grew about 4% last year, accelerated to about 7% in the first quarter. So yeah, they're doing well, but it is just a large diversified games portfolio, lots of long-lived franchises that continue to grow steady. Yeah.
You mentioned the survival game, and I've actually spent a decent amount of time on it. It just rolled out its first season on PC about a month ago. And, as part of the conversation we're just having, it's like these companies can benefit greatly if they can serve to kind of crack the code to move west, whether that be from developing here or there. But that success has been fleeting for many of them over time. But this is really one of the better Chinese developed games aimed at Western markets that I've seen over the last 5 years or so. It's adapted a lot of the game loops from beloved games like Fallout 76 with persistent base building, Power World with the presence of pets and bases and fights. It's got Division-esque combat and weapon upgrading. It's got raids and mechanic-based boss encounters like Destiny. And it has the introduction of seasons like Diablo 4, which wipe out some progress, but it has new content every 6 weeks to keep the retention loop and freshness of the game. It's also free to play, which is quite rare for this level of quality and the expense of building and running the game. They put out a PR for 300,000 concurrents after launch, which is a very good early outcome. It is still very early, and it's being monetized purely by cosmetics in the moment and a premium battle pass tier. It's a really interesting game to watch to see if they can keep up the content pace, which is pretty much mandatory these days to compete with the best in breed games like Fortnite. But I do believe they could benefit from that cracking of the code. And maybe this game only does a 300 or 400 million revenue over the course of a year. But that's a pretty good outcome. Maybe it won't get there either. But again, it's just worth keeping an eye on.
Yeah, maybe we could also just quickly discuss internal studios. I think one difference between the NetEase internal studios and the Tencent ones is that some of the Tencent studios are extremely famous, right? So like whether it's Timmy or Lightspeed, and people are just very aware of them. So I would say the NetEase studios get a little bit less, I don't know, they're just not as popular or famous for whatever reason, but certainly they've got a lot of success. Maybe 4 studios to note in particular: Thunderfire Studio, which is known for the Westward Journey series and Fantasy Westward Journey, as Matthew had discussed. There's 24 Entertainment, who are the developers of Naraka Blade Point. Fuxi Studio, Fuxi, which made Eggy Party. And then Nagiri Studio made Identity V, Amyoji, and a very small game called Badlanders. But I personally was interested in that game because it was an extraction shooter for mobile.
Nagiri is their Japan studio. So they did open a studio in Japan from Amyoji. That's where that came from. They've also opened studios in the West. They bought, I'm forgetting which one. They did buy a studio that was big on PlayStation games as well. So they did buy a console developer as well. Beyond Human game, I think, was PlayStation exclusive a few years ago. So they bought that studio as well. So they have been acquisitive, not to the scale of Tencent, but I don't think anyone is, right? But I think relative to most others, they're fairly acquisitive. They also have invested, again, as I mentioned, in building organic studios in other parts of developed Asia like Japan, and then also in the West as well.
All right, key growth opportunities. Where can they grow?
You got to start with Blizzard. They used to be the publisher of Blizzard games before Activision pulled the license because they couldn't agree on terms. But Microsoft and them renewed the agreement, so Blizzard games are coming back to China. It was about 5 to 10% of revenue before it ended. So, will it be 5 to 10% of revenue again? Who knows? But that's what it was before. I mean, that's obviously an opportunity, right? Those are, Overwatch was huge in China, right? World of Warcraft was huge in China. So bringing back Blizzard games to China obviously will give a lift, and they get a piece of that. Just continue chopping away at the pipeline and seeing what sticks. But it's always kind of a shotgun approach, and you never know until you know. And then overseas, I think it still is an opportunity, but hasn't panned out. Naraka console didn't really take off, even though it was on Game Pass, right? Naraka Blade Point, right? I just don't, I don't think the large Chinese mobile studios haven't figured out Western PC console yet.
That's why I think just the introduction of Once Human is worth watching. I've been crunching numbers on it to see if it makes much of a difference. And to Matt's point, this is already a fairly big company. It's not going to be a huge needle mover, like maybe 1 or 2 points of growth for one game. But what they learn from that, or just the momentum of that, could lead to a little bit of multiple expansion, which could move the needle a little bit for investors. That's where I'd stop on that one.
Right. An anecdotal note from me is that one of the things that is somewhat optimistic for NetEase is that some of the smartest gaming executives and leads that I know of here in the West have mentioned that when it comes to like some of the business people and the folks in publishing at NetEase, they say that those guys are some of the smartest they've ever spoken to, and not just within China, but globally. So it does sound like that NetEase has some pretty sharp folks, and
It
that
starts at the
maybe that,
top, and William, the CEO, is one of the brightest minds in China, not just in gaming,
okay,
like just all of the Chinese economy.
right. And maybe the other issue to note is, as per the challenges that we spoke about with Tencent, NetEase doesn't have the same trust issue that
They're not a
Tencent has.
platform, right? They're not the platform. They're not competing with their customers, right? And so, they
Yeah.
are independent in that sense. And so, yeah, absolutely.
So maybe a little bit easier road for them for global expansion. And maybe one other point is, I think that, I didn't mention it in challenges with Tencent, but I would say that maybe NetEase has a little bit more humility. I will say that, like, during GDC this past year, I had a Tencent guy basically message me like, hey, I didn't know him at all. I'm going to be here, which was far away from where I was going to be at this time. Come meet me. I was like, dude, I don't even know you. like the hubris of like, of course you're going to meet me wherever I want you to meet me at whatever time I dictate. I was like, dude, F you. like, the kind of like, the folks that I've talked to at NetEase are quite the opposite, where they try to be helpful, ping me every once in a while. Hey, I just wanted you to know about this or that, and it's definitely the level of ego at NetEase. I
It's
think
just
is
it's different
dramatically
culture.
less.
It's a different company. It's a different culture. It's a different business. And
Yeah,
look, this isn't to badmouth anyone because I've met great people that work at all these companies. It's just,
sure, yeah. We've got someone in our group, ex Tencent, who's awesome. So yeah, clearly not everybody, but certainly like a trend, I would say.
we didn't talk about investees here, but they also have spun off. They still own minority stakes though in the education business, UDAO, which is DAO listed. Crypto bros hate that they have that ticker. And then they have NetEase Cloud Music, which is also listed in HK. That's their streaming music business, which they spun off, and so they have minority stakes in both of those. Tencent has a music business also, so they kind of they both compete there. But so it's in terms of the valuation, like there was some fun arbitrage around the spin-offs of UDAO and NetEase Cloud Music for a little bit, but similar to Tencent, stock's been kind of dead for 3 years. It's traded, you can trade the swings around some of the new games and stuff if that's your thing. But other than that, I mean, on paper, the valuation's also cheap. I mean, it's under 10 times EBITDA, like under 13 times earnings. Like this is not an expensive stock on paper, but again, it's the China stank, and that's not going anywhere anytime soon. Oh, okay. So I know I shared this with you guys, and I won't say who posted it because it's a private account on Twitter, but they posted, I'm just pulling up what the tweet was, or it was actually 2 tweets back to back. But if you want to experience investing in Chinese equities without losing money, turn on your stove and set the temperature on high. Then take your left hand and hold it about 1 inch from the flames and hold it until you start screaming. And that's the realistic simulation of buying equities in China right now.
Can confirm.
Right. What about specific? I don't think we talked about specific challenges for NetEase. Do you guys see anything specific for NetEase on the challenge side?
I mean, it's competition, health of Chinese game market, still a vast preponderance of their revenue. It's not too dissimilar from Tencent, the exclusions we made.
Yeah, I don't think anyone questions the viability of their live services portfolio. Like they've proven for many, many years that they can continue to grow that profitably. It's the question marks like every games company around new releases. It's the question marks around international. It's the question marks around the game market, both domestically, international, the macro environment, and then the geopolitics. But nothing is super unique to them out of all of that. Like those are all concerns about every games company, every Chinese company at this point.
I guess they both have the law of large numbers working against them, but NetEase is a fraction of Tencent. And if they were to have a new $1 billion hit, that would certainly move the needle much, much further and faster than Tencent, who actually has one right now, right? It's still not doing much.
But if you guys were to think future outlook for Tencent versus NetEase, who would you pick?
Sorry,
I'm not putting my hand over the fire.
Yeah, no, I kind of like NetEase here. for a variety of reasons, most of which we've talked about. But I wouldn't say that it elevates either one to like a top pick, pound the table kind of idea, just given all of the macro challenges and a lot of the stuff that we just can't solve. I feel like the US stories are a lot cleaner. They have catalysts that we can understand, and there's none of the kind of black swan stuff that can swoop in and really spoil your day. But if I had to pick one, I'd probably pick NetEase.
Yeah, there's just too many tail risks related to China. But, government could wake up tomorrow and say more restrictions on gaming. Now it's up to 35-year-olds. It's not just 18-year-olds.
Yeah, I agree with you guys. I think that while Tencent has a massive information advantage, as well as, in my opinion, I do think they've got the best teams the best technical teams in the world. I do think that there's just a lot of risk with what might happen on a geopolitical stage. I think that there's so much local risk that Tencent takes, in that the path to global expansion is going to be easier for NetEase, as well as starting from a much lower base, as you pointed out, Brian. So I would probably pick NetEase as having a better future outlook over the next, call it 5 years.
And I think for Tencent too, you have to be comfortable around the other portions of the business, which could be a lot bigger, right? Especially if they divest from gaming and they start investing in those areas. Like if you're going to be positive on B2B software in China or cloud services, like absolutely Tencent's going to be a killer. But if we're talking about the games business and things like that, and all the reasons we just said, I'd probably rather hang out with NetEase.
Yeah, it's just, for me, there's too many red flags and question marks, and it's mostly beyond the individual control of the companies. And talk to a lot of investors. There's better opportunities elsewhere. It's just not worth the brain effort when you have better opportunities elsewhere.
Right. All right, guys. With that, I think Brian, your cat has called the end of the podcast. So
you heard that?
Yeah, with that, thank you so much, guys. You got the Pixel Brothers and Brian's cat. And we are at the end. So thanks again, guys. And for our audience, we will catch you next time. Bye, everybody.